Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, May 20th, 2022. So, another week is in the books here. Pretty wild ride. Pretty wild ride, all to close up a massive 17 cents on the day. After going and staring at the abyss, staring at the abyss, aka a bear market territory, and pulling back all the way to close unchanged, basically. Pretty remarkable close. It just happened. This is also OPEX, so all the options expire today, and then we start playing the Junes. Um, here's what I'm going to say. We just finished doing the Friday premium video for the folks in the Gold Room, and in that video, we typically look at a lot of different things and try to make sense of things going into next week. Now, if you just look at the charts, and frankly, if you kind of look at anywhere at this point, it's a pretty bearish market, right? I think that goes without saying. Anytime you have your 50 weekly hooking lower like this with a bear cross, that's really all you need to know, right? So it's a bear market, it's a bear trend, it's bear everything. I get that. But let's see what just happened here, because calling it a bear market and saying to get short, well, true, you should want to get short. The question is where? Where do you want to get short? So here's kind of a pattern that I noticed on a lot of different things, but we're going to focus on the SPY. There's your previous lows, right? Working from left to right, that green line right there that I just drew in is the initial low. So what happens when folks have a low? What happens when there's a low like this? Where do you think everybody puts their stop? Everyone puts their stop at the same place. So it's not rocket science. Everyone's got stops below that green line. You see how today's action on relatively good volume pierces the green line? You see the wick? But then actually closes back above the green line, and not only closes back above the green line, but because it closed up 17 cents, it actually closed a little bit higher than yesterday's close. That is the beginning stage of sunlight if you're bullish. Now, here's the thing. Is that enough? Is that one candle enough to come in and tell you, hey, that's the low, get bullish, this thing's going back to 405? No. But what it does do is it puts us on guard, right? So here's the way that I'm looking at it. And we're really just going to focus on two things in this video. We're going to focus on this pattern because you're going to see it everywhere. I'm just showing you kind of the cleanest version of it. And then I'm going to show you oil, which is, I think, one of the better setups in the market. So understanding this pattern here, right? This is a little bit of a bear trap. So let's talk about the psychology of this pattern. Everyone who had stops had them in the same place, underneath the common lows. So those folks get stopped out. Anyone who was shorting the breakdown was, guess where they got short? That same green line. So that little wick right there in the box is both the regret of the folks that got stopped out as well as the sorrow of the folks that got short below there. That level comes in at 385. So that is the level that I'm personally going to anchor to, that if we get a daily close below 385, meaning that not just a wick intraday action, but meaning that it actually has a daily close below 385, that's the trigger to actually get short. Probably pretty ferociously. As long as price holds 385, I'm kind of looking at this like a bear trap. Right? Now, here's the thing. You do have to see more. So in the event, in terms of what we need to see next, you need to see Monday close higher than today. Ideally, if you're at all optimistic, and it's very, very unrealistic to be optimistic long term, but in the short term, closing above today's high would unlock a retest back to that swing high. Notice that retest would come in at the daily 21. So that would be at least the opening stage to actually try to look for a short there, ideally against a sell signal, which you don't have. So not to spend too much time here on a candlestick pattern. If you look at the charts, I don't have anything really else to cover with you, right? This is very bearish action. But going into next week, keep an open mind and know if this, then that, essentially. So if this, then that. If we close on a daily basis below 385, we get short pretty aggressively. If we have a higher close than today's high, then I think you can trade this back to the daily 21. At the daily 21, we have another decision to make. But at least for now, that'll at least give you some framework as to how to look at this going into next week. In terms of the momentum indicators, they are destroyed. You had some sell signals all back here, and you rarely see the SPY trade down here for a very prolonged period of time. Also, if you look at the red line here on the trend oscillator, I don't know if you're familiar with it or not, but in case you're not, you see how it's now at 49.9. I'm going to say that's close enough to 50. So if this thing was going to have a bounce, it starts exactly like this. It starts by trapping the bears, having CNBC say, oh no, it's an official bear market. Be aware, below here, it is technically a bear market, although that way of thinking is irrelevant, but CNBC likes it. So below there, it actually is a bear market. Above there, it's technically not. Again, irrelevant, but just be aware of it. So this is kind of the perfect way to start it. Now, of course, for the last time in this video, I do promise, you don't want to just say, hey, that's good enough. Let me max out my account on triple Q calls. Not yet, but keep an open mind that as bearish as things feel, this could be a trap going into next week. So you guys have the if this then that. In the event that the trap does not play out, what level are we going to anchor to? 385. How are we going to anchor to it? On a daily close. If we have a daily close below 385, that opens up the short. We get aggressively short. We look for 350, 340. As long as 385 holds, if we make a higher close than today, then we look for the swing high back here at the daily 21. After that, we have more decisions to make. So that's how I would framework the SPY. Now, I do want to share one good setup with you. There's not many left, but I think I have at least one. Now, I think oil will do better if the market is stable. Not to be too obvious, but that is true. So I'm going to show you a setup here on USO. And we're going to look at it with a 2-day and a 3-day chart, with a focus on the 2-day. So when you look at USO here, it doesn't look like any other market, right? There's very few markets that actually look like this. And you see how on a 2-day chart it has ideal trend every time it gets down to the 21. See how it doesn't close below the 21? You see how the trend oscillator is green line over red and green line over red? And you see how on the 2-day chart you have a double thrust signal here? And now you've made a new high in terms of momentum, and you have a 2-day squeeze that has an upward bias, and you have a 3-day squeeze that could go imminently as soon as this one fires. So in terms of longs, this is where I would focus, even more so in my opinion than XLE, although if this fires long, it should help XLE. But I like USO here, as long as it holds above 80 from here on out. As long as this thing holds above 80 on a daily on a 2-day close, I have to give it a 2-day close, unfortunately, because this is the anchor for the chart. But you see how the 80 level here, it hasn't closed below it, that red line. That's kind of the anchor. So I think we could stay long USO. If these squeezes fire, this implies about a month of upward pressure on oil, basically into the summer season. And our break level is $80 on a 2-day close. So if it has a 2-day close, any 2-day bar, if we close below 80, the entire idea is invalid. But as long as we hold 80, I'm looking for this to squeeze, and I'm looking for a retest of the highs, basically. At least 85 in the short term. So that way you have a little bit of a framework there on SPY. Keep in mind that when I show you SPY, I'm basically showing you the whole market. So if SPY does the 385 trap thing that I showed you at the beginning of the video, you could trade anything. And if it doesn't do the 385 and it has a daily close below 385, I don't think you can really be long anything. I think you have to short everything. So hopefully you have the framework there, and then you have a decent pick here in USO that I think is not really caring at least too much so far as to the chaos going on in the stock market. All right, guys, that is my time. Hopefully it was helpful. Leave us a comment down below if you found any of this helpful, or if you have any questions, just drop a comment down there. We'll try to get to it. Before you go somewhere else on the YouTube, like I always tell you, before you go watch a cat video, which I'm going to do after this, leave us a like, leave us a subscribe. It really just helps us with the algorithm, and if you think that we're putting out good content, it'll help us out with the algorithm and help us reach more people. So we'd really appreciate it if you can click that thumbs up and go ahead and subscribe to the channel. All right, guys, that's my time. I'll catch you for the next Friday video. Have a great weekend. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.